Good afternoon. It's a great pleasure, because the fact is that the UK Financial Services Hub is not just a British asset, but a European asset too, supporting businesses, savers and citizens across the European Union, serving the whole of our continent and the world beyond. And not just serving Europe, but powered by the talent of hundreds of thousands of Europeans who work in it. And it's an asset of unparalleled in its history, its scale, its complexity, its agility and its connectivity to the economies of Europe and the world. A global public good, as the IMF described it. EU passporting did not create the City of London, nor did some smart regulatory fix or government incentive. It is a combination of intangibles: language, legal system, time zone, culture, networks, risk appetite, regulatory approach, all blending together to create an ecosystem, an immensely potent combination of factors, impossible to replicate or perhaps even to map. 78% of European FX trading and 74% of European interest rate derivatives trading takes place in the UK. These are services that businesses rely on to run their operations efficiently and with the benefit passed on to consumers in all 28 EU countries. And we should be under no illusion about the significant additional costs if this highly efficient market were to fragment, costs that would be borne by Europe's businesses and consumers. Those who think that the major winners from any fragmentation of London's markets would be Paris or Frankfurt or Dublin or Luxembourg should take note. The real beneficiaries are more likely to be New York, Singapore and Hong Kong, cutting Europe's market share and leaving Europe as a whole less competitive and more resilient on distant financial centres operating under very different rules. In just the last hour or so, you'll have seen that the EU has published its draft negotiating guidelines. It is clear that a deal based wholly on precedent cannot deliver the depth and breadth of market access that these guidelines envisage, because any trade deal between the UK and the EU must start from the reality of today, that our economies, including in financial services, are deeply interconnected, that our regulatory frameworks are effectively identical, that our supervisors and regulators work hand in glove to maintain the stability of our financial systems and have developed high levels of mutual trust. A trade deal will only happen if it is fair and balances the interests of both sides. Now, given the shape of the British economy and our trade balance with the EU 27, it's hard to see how any deal that did not include services could look like a fair and balanced settlement. So I'm clear not only that it is possible to include financial services within a trade deal, but that it is very much in our mutual interest to do so. We will start from a unique position, with full alignment on day one. The challenge is what happens next. So the way forward must surely be to bank our day one de facto equivalence and shape a regime to manage future regulatory change that ensures that while our rule systems may evolve separately, we deliver fully equivalent regulatory outcomes, maintaining commitments to support open markets and fair competition. As these rule systems for financial services evolve, the United Kingdom cannot simply be an automatic rule taker. The EU is a very skilled negotiator. They've done this many times before, not precisely this, but they've negotiated agreements with many countries. They're very skilled and very disciplined in the way they carry out their negotiation. And it doesn't surprise me remotely that what they've set out this morning is a very tough position. That's what any competent, skilled and experienced negotiator would do. I expect that we will have a deep and constructive engagement with them. Thank you.